Good afternoon, everyone. My name is BIZHANDUO, metric number 232016662. Today I'm going to present my research titled An Empirical Analysis of Stock Price Determinants Using Panel Data. Evidence from China's pharmaceutical sector 2030 to 2023. The study aims to explore the key financial and macroeconomic variables that influence stock price in one of China's most policy-sensitive industry. This research has four objectives. First, to examine how EPS, P divided by E ratio, and ROE influence stock price. Second, to explore the effects of market capitalization and traditional volume. Third, to assess the impact of interest rates as a macroeconomic factor. And lastly, to build a panel data regression model using 2013 to 2023 data to analyze combined effects. In Chapter 2, I reviewed literature on stock price determinants across three areas: from level indicators like EPS and ROE, market behavior variables such as volume and capitalization, and macroeconomic factors like interest rates. From level indicators are widely used, but market behavior plays a bigger role in semi-effect markets like China. Interest rates remain crucial under changing monetary policies. This study uses secondary data from East Money and Sini4. I selected 20 pharmaceutical firms listed in Shanghai and Shenzhen, collecting yearly data from 2030 to 2023. Our figures are from December 31st each year. These publicly audited indicators are standard in financial research and ensure consistency and reliability. Descriptive statistics were first calculated for all variables to understand their distribution. For missing values were replaced using data from the last trading day of the year to ensure continuity. Outliers identified by box plots were validated and retained as they reflect real financial events. Variable formats and encoding were standardized. In total, the dataset includes 220 firm year observations serving as the base for regression analysis. IBM SPSS was used for regression modeling and testing statistical assumptions like normality and multicollinearity. Power BI was used for visualizing patterns in stock price movements and financial metrics. These tools helped clarify variables relationships and enhance the clarity of results. The average stock price was 37.09 CNY, with a wide range up to 437. EPS averaged 1.1, ranging from -1.81 to 6.22, showing a max of profitability levels. P divided by E ratio had a large range, with a mean of 5.06 and a high of 31.32. ROE varied from negative 29.89% to 76.23%, with an average of 40.96 percentage. Market cap ranged from 37 to 495, and the trading volume varies greatly as well. interest rate averaged 4.48%. These statistics highlight the diversity among firms in size and performance. Normality was tested using Komogoro, semi-novel, and Shapiro-Wilk tests. All p-values were under 0.001, indicating non-normal distributions. However, due to the large sample size, n equals 220, the central limit theorem allows for regression analysis. Histograms like the one for EPS confirmed skewness visually. Other points are in the advocacy and support proceeding with parametric method. Pearson correlation results show that EPS has the strongest positive correlations with stock price. P divided by E ratio also correlates strongly, followed by market capitalization. ROE shows a weaker correlation, but still significant. Trading volume is negatively correlated, while interest rate has a weak, non-significant negative effect. These findings get the regression analysis in the next section. Regression analysis shows an R-square of 0.741, meaning 74.1% of stock price variation is explained by the model. The adjusted R-square is 0.733, confirming a strong fit. The model is statistically significant, and the P divided by E ratio have strong significant positive effects on stock price. ROE surprisingly has a significant negative effect, showing that having high ROE doesn't always lead to higher stock value. Multicollinearity was tested using VIF and tolerance values. All VIF values are between 1.220 and 2.140, and the tolerance values above 0.476, indicating no collinearity concerns. The condition index is 19.193, well below the cutoff of 30. These diagnostics confirm that the independent variables are not highly correlated with each other, so the regression results are reliable. Residuals have a mean of 0.0 and standard deviations of 0.986, supporting normality. No issues were found with heteroscedasticity or multicollinearity. The Durbin-Boston value of 0.952 suggests mild autocorrelations accessible for cross-sectional data. The model is statistically valid, confirming EPS and P divided by E ratio as the strongest predictors. These results support most hypotheses and will be interpreted in the next chapter. Overall, the conclusion is that EPS and P divided by E ratio are confirmed as the most influential variables. ROE shows an unexpected negative impact. Trading volume is weakly negative, and the interest rate has little effect. These findings align with some existing theories, but also reveal industry-specific insights in valuability. Thank you for your time and attention. I welcome any questions or feedback from the panel.